Здравствуйте.
Hello. The year 25 was extremely challenging for the oil market and for the Russian oil and gas sector, which is under significant sanctions pressure. Our conversation today about the current situation and main trends in the oil market is with Alexey Belogoryev, Director of Research at the Institute of Energy and Finance. Hello, Alexey Mikhailovich. We are pleased to welcome you back to our studio. Hello. The oil market is traditionally influenced by two groups of factors, fundamental ones, which determine supply and demand, and geopolitical ones, which reflect the impact of political and military conflicts on the market and influence prices. In today's situation, how would you define the balance of these factors, and what is decisive? Well, to put it briefly, of course, the overall trend, the average, long-term one, is set by the fundamental components, that is, the balance of supply, demand, and reserves. But that's too simple an answer. In fact, there are at least two important caveats. Firstly, we do not know the real balance at the moment. No one knows, not even the most informed among us, for example, those in the OPEC Plus Monitoring Committee, simply because the statistics do not allow it. Reliable statistics appear with a significant lag, at least 2 months, and are often revised later. Therefore, the only operational indicator available to everyone is commercial stocks, mainly in the USA, China, and several other countries. They show, of course, since August, well, if we talk about the US, until June to July, it was generally lower than even in the previous 2 years, but from August, there has been a sharp increase in stocks, which, of course, indicates a developing surplus. But overall, to say what surplus is currently on the market is practically impossible. The second caveat is that, in fact, trends are set by fundamental factors, but daily, weekly, sometimes even monthly fluctuations are often unrelated to them. This is either the geopolitics you mentioned or a non-financial factor, because oil is not only a commodity but also a financial instrument. They are among the most liquid in the world. And there, the flows between stock, currency, and commodity capital markets, and accordingly, changes in the dollar exchange rate, in which trade is still denominated, sometimes have a noticeable impact. For example, the most characteristic moment is the number of easings. These memorable ones of previous years, which really significantly influenced the volumes of futures trading and, accordingly, the price dynamics, there is no such impact now. As for geopolitics, I would divide it into two parts. This is the geopolitics of rumors or fears and the geopolitics of actual actions, facts. Well, you know, like two fires, probably. There's a fire with good dry logs. It gives a lot of heat, and little smoke. And then there are smoldering fires, which, if you throw in some withered leaves, produce a lot of smoke. The oil market is constantly in this smoky haze, a good comparison, and there's much more of it. Well, the most characteristic example of this year is the Iran-Israel conflict. There were many informational reasons, discussions. But in fact, market participants seriously, well, judging again by the same price dynamics, never, even in June, when it was the peak, when there were plans for these Iranian nuclear facilities, even at that moment, did not seriously perceive the threat of closure. Moscow, I would say that the military premium was slightly below expectations, the extreme expectations that arose because of this smoke. As for the anti-Russian sanctions, which are also, of course, a significant geopolitical factor, they played quite a serious role in 22 to 23, when everything was unclear, when everything was just beginning. And indeed, there were serious concerns, and not without reason. No one knew how it would be. Now, in 2024 to 2025, everyone has already gained experience, how Russia quite quickly adapts. Well, yes, and again, it has already become like white noise. A lot of talk, but, in general, in the end, the real price premium, this geopolitical premium, well, it is now probably, well, the upcoming price of $65 per Brent, well, probably $5 approximately, I would estimate. And in the best times, it is $1 to $2. Indeed, according to the almost unanimous opinion, analytical structures on the market are forming a surplus of supply, caused by the expansion of production by OPEC countries on one hand, and on the other hand, countries not part of the United States alliance, Guyana, to a lesser extent, as it were, Brazil, this group of states. The question in this regard is of what kind, in general, will the effect of these factors remain in 26, determining the current imbalance of the market. This year, demand has grown according to various estimates from 0.8 to about 1.3 million barrels per day, and only OPEC added 2.9. Accordingly, taking into account December, at the same time, the increase outside OPEC is also about 2 million barrels. That is, the supply grew very quickly, much faster than demand. Next year, demand will also be somewhere in the same range, 0.8 to 1.3. Well, accordingly, 1.3 is also given by OPEC, that is, the highest, and the lowest is us, and the supply. Accordingly, what will OPEC Plus be? We do not know. For the first quarter, they froze production. Further decisions, as it were, are a matter of interpretation, as it were, expectations. As for outside OPEC Plus, Brazil will continue to grow at the same pace, about 0.4, as this year. Guyana will be somewhere also 0.2, 0.1, 0.2. Canada will have a 0.2 increase. The US will sharply slow down according to all expectations, at least the ones I believe, in this. Last year it was 0.9, this year 0.7, I think it will be next, that is, in 2026 0.2, most likely. That is, due to the high base, it will be higher in the first half of the year than this year, but the third quarter will most likely be lower already, the fourth, well, maybe like this year. That is, the effect on shale production is already visible now. Well, for example, in the third quarter compared to the second quarter, the number of drilling rigs fell by 15%. There are about 410 to 420 now. That is, the impact of prices is already noticeable. In Trump's policy, this duality remains. On one hand, he advocates for lower prices to please consumers and curb inflation. On the other hand, he thereby greatly worsens the economy of shale production, primarily, and in general, oil production in the US, because the price remains a key influencing factor. And a price of 60, this is already, frankly speaking, bad, a critical level for cost, and if it is 50, this is completely not good. You mentioned regarding forecasts. Throughout the year, we have seen competition of forecasts this year between the main analytical institutions. IEA, US Department of Energy, OPEC Plus, gave completely opposite assessments of the situation. And I think we can conclude, although some may disagree, that OPEC Plus has clearly lost this forecast competition, because until November it was predicting a supply deficit of 1.3 million barrels per day, and only in November to December did it start adjusting these figures towards a more balanced market. Moreover, OPEC lost precisely due to its own actions, due to increasing production at a pace 4 times higher than initially indicated. In this regard, the question is of what kind. How would you characterize OPEC's logic of actions, and has OPEC achieved its main goal in this policy of expanding its share of the market? Well, you know, there is a hypothesis, which I generally agree with, that in OPEC's policy, and now OPEC Plus as its successor, there is a certain cyclicality. That is, there is a period of time when OPEC Plus, is ready to restrain production for the sake of, accordingly, higher prices. This stimulates production growth outside OPEC Plus. And the turning point comes when, in general, the situation becomes quite unfavorable in terms of losing dollars and market share. And at this moment, accordingly, OPEC or OPEC Plus is ready to concede to such a price war for a while and, accordingly, deliberately lowers prices on the market. In my opinion, this is exactly that moment now. That is, the fact that prices are falling is not at all what OPEC Plus countries fear, but the key countries, primarily Saudi Arabia, the UAE, and obviously Russia as well, are in this company.
Саудовская Аравия, ОАЭ, ну и Россия, очевидно, тоже в этой же компании. То есть это более-менее направленная политика.
So this is more or less a price-directed policy. The next question is the boundary of the fall they are counting on. That is, where is the boundary when OPEC Plus will say that the situation is becoming unmanageable? Because right now they believe it is manageable, it's a debatable question whether this is true or not. Well, at least that's clearly what they think. I think this boundary is around $50. That is, now, if they are prices are conditionally 60 to 65 per brand, then the corridor down to $50 is acceptable in terms of cost and everything else, well, and the cost in terms of overall income. That is, the P plus country is ready to endure for some time, a year, 2. It's hard to say exactly what period. Probably the year 1926 to 1927. With that, to show countries with higher production costs that they shouldn't expect us to maintain prices. That is, lower them, and this will have an effect, I think, somewhere in 27. It is known that the Russian Federation throughout the year supported the OPEC Plus decision to expand production by a large step. Field 500,000 barrels per day went on and so on. Despite the fact that we know that in a surplus market situation, first of all, oil under the sun is removed from the market by various administrative barriers. And today, if you look at one indirect indicator, the so-called forced maritime storage, their Iranian and Russian grades under the sun still dominate. What prompted such a decision? The motivation to maintain the unity of the alliance, or simply the understanding that any other decision, any other position of the Russian Federation when voting on these issues simply could not, so to speak, gain support. Your opinion? I understand. It seems to me that the leader in this case is still Saudi Arabia. That is, it sets the tone. But Russia, like other participants, had little choice, because it was impossible to maintain production with these cuts any longer. The United Arab Emirates were united. There was Kazakhstan, Arabia, a number of other countries that in any case continued to increase quite quickly. So the framework needed to be relaxed. The fact that they were relaxed so much and so quickly, this is already some kind of deliberate price war policy, in my opinion. That is, the interpretation could be different. But Russia is obviously not a passive participant in this case. That is, its consent was important. Did Saudi Arabia threaten to collapse this agreement or not? Well, I don't know. But neither Russia nor Saudi Arabia benefits from losing OPEC Plus, because it is a real tool for influencing the market. Russia, in fact, did not have such a tool at all before this agreement was created. For Russian exports, I wouldn't say it's a key factor, but still, the sanctions pressure has a greater impact. Exports are decreasing. That is, if last year it was 240 million tons, this year, I think, it will be 233. Next year, probably 220. But this is not related to OPEC Plus in any way. This is related to the impact of sanctions on the consumer, various sanctions, yes. In order, as it were, to conclude this conversation about OPEC, it is known that they have suspended the expansion of production for the first quarter of 26. Due to changes in their forecasts. If you look at the dynamics of the situation, as it were, today, is there a chance that the alliance will extend the production cut at least for the spring? Well, I think this pause is taken, firstly, to look around. Secondly, the first quarter, objectively, low demand, yes. The same was true at the beginning of this year. Also, in the first quarter, there were no actions. Growth began in April. I think the growth will continue. The question is its pace. Maybe the pace will noticeably fall. But from the general policy of increasing the market share, in my opinion, this plus will not refuse. Despite the fact that prices are falling, despite the fact that the trend has been downward lately, there has been no reduction in American production to date. Moreover, in the last week, it has been at historical highs of 13.81 million barrels per day. These are indeed high figures. In this regard, among American experts, there is sometimes an assumption, because no one has the knowledge here, that there is some technological progress. There is a process of increasing the return from the well due to these technological innovations. How would you comment on such opinions, which are quite widespread? Well, it undoubtedly exists. The other thing is that, again, its pace has fallen significantly. The main progress was in the second half of the 2010s, when the cost price really fell sharply. For various reasons. Now, firstly, there is cost inflation. It hasn't gone anywhere. Well, secondly, for example, Trump's anti-immigrant policy also negatively affects potential production, because many immigrants work in the same Texas, in the Permian Basin. In the Permian Basin, yes. And here, as it were, there may be problems even with the labor market point, although it is still an attractive profession there, a driller, difficult, hard, dangerous at times, but still, the number of those willing to do it is not decreasing. But there are limitations, so, in my opinion, the shale boom is definitely already played out, approaching its very end. There will be growth, but it will be less and less. I repeat, I would conservatively expect only 0.2. Today's sanctions are announced on both individual oil companies and oil transportation, meaning, as it were, the shadow fleet tankers of the Russian Federation, yes. So, there are already sanctions on buyers, if we talk about Indian duties, yes. And in the last package, sanctions on oil products produced from Russian oil by foreign manufacturers are already being discussed. That is, they have reached a certain maximum level somewhere. Until now, it seems that adaptation to the sanctions mechanism has been quite successful. Now, can we say that with the next round of sanctions, meaning the latest sanctions of the oil war, the Russian Federation is also successfully adapting, that our adaptation potential is not exhausted? We must immediately distinguish between physical volumes and value, because physically, yes, adaptation is still ongoing. Well, we can refer approximately to the beginning of the year when there were sanctions against Gazprom, oil, Serbit, similar oil and gas. At that time, it was evident that their exports sharply declined, but the exports of other companies proportionally increased. While the structure of production in Russia does not change, it is more or less stable. A similar graph is now circulating in oil analytics. The same thing is happening with Rosneft. Again, some other exporters are taking the same amount. The key question is uncertainly related to India. Indeed, there were concerns, and to some extent, there still are, that India might make some political deal with the USA if the USA puts too much pressure, and indeed, reduce the physical import of Russian oil. In this case, redirecting this Russian export will be difficult to redirect somewhere. China can partially take it, but China is not a bottomless barrel at all. And in general, Urals is of interest to them quite, well, not very much, less than 70, mainly for eastern grades. Therefore, well, maybe there, 0.4 to 0.5 million barrels per day out of 1.8 that go to India, it would take. But everything else will definitely sag. Therefore, the main question is with India. Well, for now, economically, Russian imports are extremely beneficial for India. For example, the processing margin when supplying diesel fuel to Rotterdam from India based on Russian industry is $13 per barrel now. This is a very, very good margin. It is clear that the European Union formally introduces a ban on the import of oil products from January. But we all understand that technologically it will be very difficult to track this. That is, various bypass schemes are possible, most likely they will be used. Therefore, economically, there is no sense for India to refuse Russian oil. Moreover, the discounts on Russian oil also affect the cost of other suppliers. Because everyone is forced to adjust to Russia, here, first of all, Iraq, which thanks to being the largest supplier, is also forced to apply discounts. Therefore, this generally reduces the cost of the cabandist oil basket, and India will hold on to this. As for discounts, they are now huge. $20 to $25, well, just something, but, Alexey Mikhailovich, excuse me, I'll make a remark. If we talk about discounts, they vary quite a lot depending on the ports of departure. For example, Kazmino last week, the discount even fell, 13 to 14 there, more than 50. In the southern ports, in the western ports, just the opposite trend. 25 to 26, well, precisely because the Far Eastern grades are mainly in China, and everything is stable there. And the main questions are about India, stabilization of the discount, when can it be expected, and can it be expected at all? A reduction will definitely happen. I think the reduction will be in the same corridor, somewhere $12 to $15. As it was, I don't know, in Songar in the summer in September. I mean, by discount, I understand, the difference between FOB and FOB. Yes, I understand. It's clear that for importers, like in India, the discount is much smaller. Well, I think by March, unless there are new restrictions introduced, which Trump occasionally promises, some dreadful sanctions of an unclear nature, some new tariffs. But probably, all else being equal, by March everything should more or less stabilize, and the discounts should decrease. But the value losses are still there, of course. Significant. So, you can't say that these sanctions are painless and don't affect us.
The
value of euros next year will still be less than it could have been without these sanctions. I see. Well, I would say your last answer was quite optimistic. On that note, I'd like to conclude. Thank you very much for the conversation.